Hey guys, thanks so much for joining us. We have on the line Andrew Hoffman from milesfranklin.com, and boy, do we have a lot to talk about today. Andy, thanks so much for joining us.
As a pleasure, as we're on this precipice of history with all these earth-moving events on the horizon.
Yeah, the Scottish referendum, probably at the top of the list. I have so much to ask you about. The SGE International Board is going live on Thursday. I believe that's 12 days ahead of schedule. But let's talk about the Scottish referendum and what could potentially be the fall of the EU, or certainly the beginning of the fall of the UK empire.
Well, back in 2011, even before I joined Miles Franklin, I wrote an article called Unprecedented, talking about just this thing. I said that the European Union, due to its myriad cultures and financial situations, would eventually break up. I mean, they put this thing together. Think about it. The EU has only been around since 1999. That is the peak of the global economy. And even back then, most of the countries that were initially part of it didn't meet the criteria for remaining in it. And here we are today, and even the Germans don't meet that criteria. And basically, look, the world is the economic world is falling apart. Europe more than any because of the bureaucracy of the EU and the pervasive socialism, and of course the horrific finances of the pigs. So I think it's just been a matter of time, as I wrote in my article yesterday about secessionist movements, before this occurred. And it's not just Scotland, which to me just came out of nowhere, which would be a huge blow to the UK if this occurs. But we're talking about Catalonia, Spain, whose vote is scheduled in November. I mean, 2 million Catalonians protested for this the other day. In fact, they shaped a V, which I thought was pretty cool, in Spain, and that's 25% of Spanish revenues. And then there's Venice, Italy, that's 10% of Italian GDP. So it's just, the dominoes are starting to fall. And if, by the way, that Spanish referendum, which is on the edge, turns out to be a yes, I would think that those dominoes are going to fall a lot faster in the coming months.
Yeah, that's interesting. V for Vendetta. We're seeing sort of a uprising planet-wide at this point. Now, we've been talking about this for a very long time, as you've noted, and I think it's exciting. It's exciting to the degree that it seems to me that people all over the planet are starting to be able to articulate and understand the core of their problems. And at the core of those problems are these out-of-control central banks that can work under the cloak of darkness and are unchecked. They're an unchecked power that is destroying nation after nation. And of course, in the case of the EU, throw in the IMF, throw in the Bank of International Settlements, throw in the larger privately owned organizations that oversee the central banks. Let me ask you this. As far as the Scottish referendum goes, what happens the day after if the Scots vote yes? Because my understanding, correct me if I'm wrong, is 90% of UK's oil production comes from Scotland. They would also lose a very key water port.
Well, first of all, from what you just said before, I mean, Hugo Salinas Price put it beautifully the other day when he said basically the root of all these secessions is the fiat currency, because a handful of people are in charge of it and they mete it out to their cronies, and most of the people don't get it. And the people that don't get it tend to be the ones who want to escape. I did a podcast the other day. I said that secession is the ultimate debt dodge, because either you're trying to escape someone else's debts or you're trying to kick out someone who has debts. And I think that's a perfect example of what's going on in all of these places. And as you said, yeah, the people of the world are starting to realize that the central banks have abjectly failed in everything they've said, and as you say, destroyed country after country. So at some point, people just want to escape from them, and that's what's going on here. Now, as for Scotland's next day, I did the math, I did the research. They are theoretically 10% of the GDP of the UK, but as you said, from a property dispute, 90% of the oil production is theoretically on Scottish land. I mean, I know this because I was an oil field service analyst for 10 years. I took multiple trips out to Europe to see oil service companies. Never in London, always in Aberdeen, which is where all the projects are. It's kind of like the Houston of the UK. So what would happen the next day? Who knows? What's their currency going to be? What's their government going to be? What will be the UK's response, especially if the Scottish say we want to keep all the oil production? I mean, it could get extremely ugly, and more importantly, how ugly will it get for the rest of Europe when the Catalonians see this and the Venetians see this? And the Germans, for that matter, see this.
Yeah, George Soros, we noted, was recently in a panic, and of course he was saying this is the worst possible time for Scotland to break away, and of course that's a panic because he sees the EU falling apart. And I'll tell you what's interesting about it, Andy, is that we've noted time and time again that as nations move away from the dollar, what does the West do? It positions itself for an attack. Now, if the Scots want to move away from the pound, which appears to be exactly what they want to do, what is Britain going to do? Prepare itself for an attack? I mean, we're talking Civil War level stuff here. And I also find it interesting that as nations move away from the dollar and our government aligns itself against these nations in a very aggressive posture, we see the BRICS helping nations that need it. For instance, the BRICS are helping Argentina with infrastructure and loans as Argentina defaults against the vulture funds in this country. So with Russia partnering with Argentina, including delivery of 1 million tons of natural gas and oil products, we see the model for the future. And it's what Ron Paul has always said. Partnerships and alliances, free trade with nations. What's your take on what we're seeing right now with the BRICS, with Russia, with China? Would you like to talk about any of that?
And I must commend you, Sean. You are on top of your game this morning over there. Very impressive.
Thank you, sir.
Well, as for the pound, as you said, yeah, not only do the Scots not want the pound anymore, the British, as part of their scaremongering, have already said in speeches this week, you can't come in. We're kicking you out of the pound. So it's like a matter of, okay, I don't want to be here, and you can't be here anyway. So who knows what they'll do? But as you said, most likely what they'll do is they'll be embraced by the growing empire that is the China-Russia Eastern Axis. I'm not saying it'll happen the next day, but yes, you're making a perfect point. Argentina defaults. It's all because the United States, their own government, but the United States was a large part of it, especially because our Supreme Court is what kind of made it happen, made the final coup de grace for them.
Right.
But ultimately, I think that China and Russia are leading an Eastern Axis, which will only grow in time as the anti-dollar, or more importantly, the anti-Western currency. Will they do it right, or will they fall into the same issues of money printing? When all is said and done, who knows? But in the meantime, any country that has any kind of common sense is going to run as fast as they can from the West and into the arms of the East.
Okay, and now I want to talk about the strong dollar, quote unquote, the strong dollar. As our friend J.S. Kim from Smart Knowledge U wrote recently, do not let the strong dollar illusion lead your wealth preservation strategies astray. And he notes that what the central banks have done is they've manipulated the currencies worldwide lower to make the dollar look stronger. So for instance, as you know, Andy, the euro's down 7.3% in 4 months. The yen down 5.8%. The pound down 6.5% in 2 months. The Swiss franc down 6.75% in 4 months. Meanwhile, silver has plummeted 16% in 7 months, all in the effort to prop up this fiat dollar. What do you make of the strong dollar? And as we're talking today, of course, the FOMC meeting is later today here on Wednesday.
Well, I mean, I've written about this forever. There's a big difference between the dollar index and the dollar's purchasing power against real items of value. In fact, for those that want to get all excited about the quote strong dollar recently, yeah, it's gone from 80 to 84. It's basically traded between 75 and 85, 99% of the time for the past 10 years. So it's not like there's anything that's particularly crazy going on between the dollar and the euro. They're two gigantic currencies, both of which are in the, as they call it, the final currency war of debasement against each other of like-size GDP. So it's pretty difficult for one of them to collapse against the other. And that's why, even people like Sinclair, when they say, well, the dollar is going to go to 50, I just can't see that happening. Because if the world got that bad, that confidence in the reserve currency utterly collapsed, well, what do you think would happen in Europe? I mean, in Europe, they're already seceding and trying to get rid of the currency. So there's no way you're going to have some like strong European presence while the United States is collapsing. We'd probably be in war and certainly in hyperinflation in many parts of the world. In regards to what J.S. Kim wrote, and he's a smart guy, but it really doesn't matter whether currencies are, quote, manipulated or not on the foreign exchange markets. I mean, yes, they are manipulated, but the euro is down because they just announced that they're doing Q to infinity. The yen just announced Abenomics, and they're probably going to double up on it. And and whatever happens to these currencies, it's going to be a sympathy thing for the Swiss franc, which is pegged to the euro, and the pound, which is essentially pegged to Europe in general. So it's not a matter of quote manipulation. It's just a matter of the normal currency volatility, which last week I wrote in an article is the single most bullish precious metals factor, the currency volatility inherent in fiat currency systems, which is, by the way, why the average currency has fallen over 20% against the dollar just in the last 3 years since QE1 and QE2, or I should say QE3 and QE4 and Abenomics since that all started. Last week, actually 2 or 3 days ago, I wrote an article, an equivalent article called "If a Nuclear Bomb Destroyed Europe," and it's my take on kind of what J.S. Kim is saying, which is the dollar is not strong just because the Europeans announced negative interest rates in QE to infinity. It's like if a bomb destroyed London today and Paris today, yes, the dollar would go up against the euro, but that doesn't mean that the dollar is strong or that the world is any better. Probably we'd be going to an economic collapse and hyperinflation. But yes, on the foreign exchange market, the dollar is strong. What matters is what the dollar buys in the real world. How much food does it buy? How much energy does it buy? Does it matter that because the CPI was reported as zero today on your cost of living, do you get to benefit from this? Of course not.
All right, Andy. Well, what I'd like to do now is circle back and talk about China. I want to talk about India. I want to talk about gold moving from east to west, as you've noted, as Harvey Organ has noted, as John Embry has noted. In fact, Harvey Organ is predicting that China will soon announce its, as he believes, 4,500 tons of gold. And the yuan right now is very much a currency of choice, as we see so many countries creating bilateral trade agreements with China in the yuan. Now, what I'd like to ask you, feel free to jump in at any point here about the yuan, China, whatever, but I wanted to ask you about this SGE, the Shanghai Gold Exchange International Board is going live this Thursday, September 18th, and I think that's 11 days ahead of its original launch date. There will be 11 yuan gold physical contracts, and UBS, Goldman Sachs, HSBC, three criminal banks, will participate. I'm not exactly sure what this SGE International Board is, but maybe you know, and you can help us flush this out, because we know that China does have real physical gold, and they love to trade real physical gold and silver contracts.
Well, it's funny that I read everything, and what you're telling me now is news to me. I haven't seen anywhere where they're moving up the date from September 29th to September 18th, but I'll look into it now. In fact, I was going to write about it next week. I thought I had a week to write about it, and I've done a fair amount of work beforehand. Actually, anyone could look at the work of Koos Jansen,
Right.
Koos is his first name, because he's pretty much he lives in China, and he's the kind of expert on the Shanghai futures and gold exchanges. But from what I've read so far, I mean, it's shocking. The Shanghai Futures Exchange is far larger regarding silver in terms of both trading volume and delivery. Certainly, delivery shouldn't be surprising to anyone, because I don't think anything ever gets delivered from the COMEX. I think it's just a big black box of accounting lies. Heck, last year they put out a disclaimer saying this data may or may not be true, and then J.P. Morgan, of all people, was just fined for admitting that they constantly give fraudulent data. So who knows if even the minuscule amount of inventory that they say they have is even there. I kind of doubt it. Otherwise, it certainly would have been taken out in 2008 and 2011 when the whole world ran out of silver. But of course, the COMEX didn't report that happened. And as for China, look, everyone remembers April of 2013, that is last year, when Obama had his closed-door meeting with 10 of the largest too-big-to-fail CEOs. And that very day, Goldman Sachs put out an aggressive short sale recommendation on gold. And in the following 2 days, gold fell $250 an ounce and silver $6 an ounce. And since then, it's been nonstop 24/7 suppression like even we've never seen it before. But since that time, the Shanghai Silver Exchange's silver inventory has fallen from from 1,100 tons down to, I think, 90 tons. Over 90% of its inventory. And you know how much 90 tons is worth? A measly $60 million. There can't be less than 100,000 entities on Earth that could take that out in a second, if that's truly the correct number. So, look, something is going to give, whether it's the COMEX or the LBMA, where we all know it's fact that the gold has been leaving and 24/7, and it's been refined in Switzerland to go points east. We don't even know what the import numbers are to China anymore now that now that they're not only reporting China, they have the Chinese imports into Hong Kong, but the stuff going into Beijing, we don't even know what the numbers are anymore. But my guess is last year's record levels aren't going to be a heck of a lot different this year, and the same goes for silver. Something is going to give at some point. Will it be the commencement of these new internationally accepted physical contracts on the Shanghai Exchange that start in late September? I don't know, but something is going to cause it, probably sooner rather than later.
Yeah, and I want to talk about Harvey Organ's appearance on Greg Hunter, and also John Embry was on Greg Hunter today. But I want to circle back, and I just want to read this news clip for you guys. It's from Goldcore. Gold demand in India triples as China launches global gold bourse tomorrow. Let me jump down here, and it says, the Chinese government-backed Shanghai Gold Exchange brought forward the launch date of its international gold trading platform, which is hosted in the city's free trade zone. The gold trading platform will be known as the International Board. In a surprise announcement, the SGE said today, that was yesterday, I believe, that the International Board will go live this Thursday, September 18th, 11 days ahead of its original launch date of Monday, September 29th. And then it goes on to talk about the 40 members of the exchange, including the global banks, UBS, Goldman Sachs, HSBC. That's what really trips me out, is these global criminal banks that have really been at the cusp of fixing the price of the metals, know that they can't miss the game, so they're getting involved in this Shanghai Gold Exchange, this international board, but it makes me wonder what the bigger picture is, and I guess we may just need to see how that plays out. Would you like to talk about these other items here that I have on my list, Harvey Organ on Greg Hunter, because I think he's agreeing with you 100%. And boy, did the trolls come out on my site in the comments section and below Greg Hunter's video after Harvey Organ made his appearance a week and a half ago, and he's predicting a collapse by December. And I think, Andy, between you and me, that's the only thing he did wrong in that appearance on Greg Hunter was pick a date, because you and I know that's a fool's errand. You can't pick a date anymore, but bless his heart, he's a good man. He picked a date. He believes the collapse is going to happen of the metals manipulation by December, because China and Russia are taking almost 100% of the world's annual gold production. The U.S. is leasing out all of its gold, no gold left in the central banks. SLV and GLD are nothing but frauds, just obligations. And he believes the physical default will be because China wants its gold and London won't be able to deliver. I don't see any reason for trolls to come out and hang the man for that, because that sounds like just cold hard fact.
Well, I mean, you're going to see more negative emails than ever now, because gold sentiment has fallen back to its, if you could believe this, its levels from 10 years ago. So, even here at the Miles Franklin blog, we're even getting a few angry emails saying, what are you guys talking about? Because people are upset that they don't understand the fact that the desperation of the cartel is what has caused financial markets to be so out of whack. Not wrong predictions. And again, as you said, of course, it's a fool's errand. I never predict any of these things. I talk about what will happen in the long term. And the same goes with Harvey. Now, I don't even know if he actually, I mean, I listened to it. If he actually said December, he's trying to say that based on his research on all those topics you're talking about, it just doesn't seem a reality that there's any physical metal left, or enough physical metal left to satisfy the insatiable demand of the East. Now, of course, who knows what's going to if it's going to happen in December, and who knows if what breaks the market is going to have anything to do with the comics. I mean, it could be a black swan event. It could be the Scottish referendum.
Right.
I mean, who knows what it is? But yes, Harvey knows. He knows those numbers better than anyone. But as I said before, I think a lot of those numbers are pure bull. But he's doing general. It's kind of, you build a mosaic, and Eric Sprott's done the same thing, going back to Frank Venerosa, who did it 15 years ago. You build a mosaic of the potential sources of supply and demand, and if you do the crude math, it would seem that there can't be much physical metal left. And will it be a catalyst that does it, or will it be that the Chinese simply demand it? I don't know. But again, the Chinese don't want this to happen. The second that the Chinese demand their gold, or say that you're defaulting, that's it. They can't buy anymore. There'll be no more gold left to buy. Every ounce will be bought up the next day. So they and the Russians and anyone else who's accumulating gold is going to try to do it as quietly as possible. So when they do say something, if they say something, and by the way, I think they have far more than 4,500 tons. I think they probably have 10,000 tons or more. But when they do say something, you can be sure that there's no metal left anywhere.
Well, and I want to just say about Harvey Organ, I think he's a very good man, and we interviewed him a few years back not long after he made his presentation in front of the CFTC in March 2010. And, he actually made international news as well because he had so much difficulty taking delivery of his physical metals from Scotia Makata. And then when he got a tour of the vaults, he discovered that they were largely empty, literally largely empty. I mean, we're talking a couple hundred ounces of gold, which they called their working supply day in and day out. And Harvey Organ's a good man. That CFTC meeting in March 2010 netted us Jeffrey Christian's admission that, of course, there's at least 100 paper promises of gold for every 1 ounce of physical.
Let's face it here. We are stretched to the limits. Everything that we've seen in the last few years, and particularly the last 3 or 4 years, is unprecedented. The level of, and forget propaganda. Propaganda has been around forever. It has more outlets right now. But you talk about the money printing, the schemes they have for creating derivatives, for swaps, all kinds of things that you don't see, and of course the means of manipulating markets, all the algorithms. In gold's case, they have an overnight market to play with, which is ultra thin, and all these various paper exchanges. They've stretched to the limits of humanity. How far you can manipulate prices without causing collapses, and that certainly it starts with the Achilles heel of the system, gold and silver, because they're doing it with paper, but there's only so much gold and silver out there. As for the paper markets, to see stocks trading at valuations and sentiment levels and margin levels above that of even 2000, forget 2007, amidst the worst global economic situation and geopolitical situation of our lifetimes, shows you how strained they are against the limits of manipulation. The same goes for taking bond yields to historic multi-century lows at a time where the global cost of living has never been higher, where debt has never been higher, where geopolitical risks have never been higher. So everything is unprecedented. But as I've written before, economic Mother Nature didn't go away. You can't beat her simply by printing money and manipulating markets. And therefore, the end game is just that much more of a spectacular collapse when finally the reality hits, which is it tomorrow? Is it next year? I don't know, but it's not 10, 12, 20 years from now.
Economic Mother Nature didn't go away. I like it. That's a good one. Well, our guest has been Andy Hoffman from Miles Franklin. Andy, is there anything that we've missed that you think we should touch on? Anything critical that we haven't talked about yet?
Well, I mean, look, the FOMC meeting is today. It's completely meaningless. Whether they take the words "considerable amount of time" out of their statement. The fact is, the Fed doesn't act in the name of the economy. Obviously, it doesn't, because the economy has never been worse. They act in the name of financial markets. And the only reason they have any leeway at all to even speak of such things is because right now they have a tight grip on financial markets. The second that they lose that grip for a second, such as maybe the physical gold market, or maybe some kind of fears because of a black swan event, or simply the weight of the global economy crushing on. As soon as that goes against them, they'll be out screaming about QE overtly and doing everything possible. Because again, as Peter Schiff said, when you live by QE, you die by QE. It's a Ponzi scheme that must grow larger. It can't ever get smaller, no matter what lies they say, no matter what propaganda they say.
Yeah, and I just want to point out again the work of Steve St. Angelo, SRS Rocco, a friend of ours and yours, Andy. I know you appreciate Steve's work. You touched on it earlier in this interview. Guys, the SGE physical silver stocks are down some 90%. So as we talk about this economic Mother Nature, the real deal, the real fact of the matter is that they've manipulated the prices of physical precious metals in dollars to be lower than they should be in a free market that was recognizing all of the storms and the coming storms and the economic tsunamis that are out there worldwide, all of the things we've just talked about. So if you want to take advantage of purchasing precious metals cheaper than they should otherwise be, and know that that is the case, that China is soaking up the physical silver. The SGE physical silver stocks are down 90%. That's a fact.
And keep in mind, I predicted a year ago when the reserves of the mining companies were written into oblivion. I said that I believe, just done anecdotally in my research, cumulative research experience, that not only is gold and silver production peaked forever, I wouldn't be surprised to see them down 20 to 30% in the next 3 to 4 years. And if we keep going, I mean, we're almost at the year end where they have to make those reserve calculations again. It's going to be even uglier next year. And wait till you see what happens when the Newmonts and Barricks do start merging with each other. It'll be the same as when Exxon merged with Mobil. It'll be a complete paralysis of any new development in the gold and silver industry for years. I think production is going to fall so precipitously, it will shock even the cartel.
For those of you that want to take action, for those of you that want to soak up some physical precious metal, as China and India and Russia are doing, you can call Miles Franklin. Andy, how do they get a hold of you guys?
Sure, it's 800-822-8080. We're finishing our 25th year of business this year, and as always, you can email me personally at ahoffman@milesfranklin.com.
Yeah, Miles Franklin, they're straight shooters. Andy, thanks so much for your time. This has been a heck of an update, and I look forward to talking. I guess we should get together again real soon and talk about how that Scottish referendum turned out.
Yeah, I look forward to it, I think.
All right, Andy, thanks so much for your time.
Same here.
All right, guys, thanks for listening. Thanks for checking us out at sgtreport.com, and we do appreciate you visiting the Liberty Mill as well. Real news 24/7, 365. Have a terrific weekend coming up. Bye-bye.